Welcome aboard, Angie. So, listen, what we do here is we always ask our guests to come on and talk about some of the most important things that they think are going on either this week or just in the markets in general. So, what's on your mind?
Oh goodness. I mean, for one, I have China headline fatigue, so we could avoid talking about China headline and I'd be a pretty happy camper on that one. I mean, that was a big deal, but I think the biggest deal of the week this week has been all of the flooding that we've been seeing in the Western Corn Belt. Parts of Nebraska have been completely
Yeah,
underwater.
I
You've
have a
got
chart
multi
here for you.
There you go. Yeah, you can see all of the areas in purple right now are really struggling. Some of them in the northern areas, the Dakotas specifically, haven't necessarily seen that big chunk of flooding coming yet. One thing that's really interesting there, if you look at the purple up by North Dakota and Minnesota and how it doesn't move south, that's the Red River Valley, and that actually moves north. But the areas highlighted in purple there in Nebraska, Iowa, parts of South Dakota, Missouri, along the Mississippi River there. That's really one of the key production areas in the United States when it comes to corn, soybeans, and they had a lot of grain stored, and a lot of property damage done, and we're about 4 weeks away from really getting rolling with planting, or when we're supposed to be rolling with planting. And so a lot of folks are really kind of looking at that, and it's damaged a good percentage of our ethanol production right now. Either plants are just offline or they can't move product. The rail sidings, your railroads have been washed out. I mean, it's a mess. And so most of this week we've been kind of just trying to wrap our arms around what it means, wrap our minds around, the loss of life, the loss of animals, the loss of property, all of those things. So that's really been kind of the headline of the week. And then also we've been watching the commitment of traders and just what's taking place there with that big short in the commodities across the board as well. So several
Now,
things starting to happen. We're going into the busy time of the year, you could say.
yeah, I have to ask you,
Yeah.
because like I naively, my first impression is when I see something like this, I would be thinking that when I flip over to the charts that we should see substantial price response to this, and I feel like that I would never have known looking at the charts that something like this is happening. Why
Mhm.
are we not seeing this translated in the prices?
There's a couple reasons. I mean, first and foremost, we have relatively large supply available to us. We have a good amount of corn. We have about 1.8 billion bushels. The lower end of what we like to see is about a billion. So we have nearly double the amount of corn that you could say is low on the pipeline side of things. We have a historically large carry out in soybeans at this point in time. So that's really, for one, keeping a big damper on the market. For two, it is early yet. It's kind of a running joke in the commodity side of things that everyone always says it's early, but it is. It's only March 22nd. And so if the weather were to turn warm and dry, you would be amazed at how quick we can get this water to run off and dry out and things of that nature. However, we aren't seeing the forecast turn warm and dry. We're actually expecting it to stay relatively cool and wet. But we do have a record large short position, or did. I haven't had a chance to look at commitment of traders from this past week here. We had a record large short on corn. And so people are going to try to protect that corn and wheat. The speculative position is extremely short. So it takes a lot longer, to kind of turn the ship when everyone's already on one side. So it is a little bit surprising. I had a lot of farmers come to me and say, why isn't this market reacting to what's taking place? And obviously, the market structure in and of itself doesn't necessarily know how to handle too much moisture either. Droughts are a little bit easier. You can see pictures of what droughts do. Too much rain, at least over the last several years, we've discovered, typically where you have too much moisture, you have, just the right amount elsewhere. Obviously this is quite a bit different, but we do have a few weeks yet before we really will get concerned over what's taking place.
So, Angie, it's Kevin here. So I'm just pulling up the CFTC commitment of traders on corn, and it looks like it's basically unchanged. It's still hovering just a little more than 100,000 contracts. One of the things that I must admit to being a long-term frustrated grain bull, and one of the reasons, one of the reasons is that when you adjust it for inflation and look at this, it ends up being one of the few commodities that is kind of scraping along all-time lows, and especially when it's adjusted for inflation. And yet, it just doesn't seem to be able to muster a rally, and it's just one of those things that it's almost like buying VIX. It's just
Yeah.
continually a loser. And I was just wondering what your impression of why that is, and are we ever going to see this change, and are we ever going to see some sunny days ahead for the farmer?
Yeah, I mean, I think, you've answered your own question to a certain extent because you are a frustrated grain bull, and everyone that's tried to buy this market since 2013 is in the same boat, right? So why would you come in and buy corn when the most you're going to get is a 10% return on your investment if you're lucky within a 10-day investment structure when the outside markets have been offering volatility and opportunity? Even soybeans have been offering volatility and opportunity, even if they're trading on the lower end of their recent range. Wheat's had some some significant ranges that it's allowed folks to capture some decent gains and some decent losses if they went the wrong way. But corn, really, I mean, it's about as tight of a range as it can get. I think since 2000, I mean, you look at this right now, and obviously, you're looking at a high side on the continuous at 412, where on the low end you're looking at like a 336. I mean, you really are not seeing much in the way of big ranges over the last 2 3 years here, 3 years. I think we've traded about $1, 25, and that's happened over an extended period of time. Most of the time, though, we've spent trading, in this 10-cent type, 15-cent type range. And so I think that's one of our problems is that we have a lot of frustrated folks that have come in and tried to trade it. And so, you could sell. I'm reminded of the Wayne's World, where Frampton comes alive. Frampton comes alive. They came in the mail samples of Tide. You know what I mean? And like that's the corn futures. They're a sample of Tide. No one gets excited anymore about buying corn just simply because there isn't a story. Now, I, for one, feel that there is a story and it's developing. We really were delayed in fall field work here this past year. A lot of farmers in the Western Corn Belt, those areas that are flooded, like to do most of their spring prep work, believe it or not, prior to winter. So that means they go out and they, disc the fields and get them prepared for planting season, several months ahead of time. They didn't get to do that last year because weather was so poor in the fall. So we really, really needed this nice, dry, warm March, really, to get caught up and be able to plant the 94 million acres of corn everyone was anticipating we were going to plant 6 8 months ago. So that hasn't happened. And if you look at some supply and demand outlines when looking ahead and take a look and play around a little bit with some planted acres and drop them down, maybe closer to where we were last year, and start factoring in supply and demand and what we're looking at on the demand side, you'll find that we'll really, really cut into that carryout. I mean, our demand is pretty phenomenal. There's some questions as to whether or not Brazil and Argentina will be able to provide, large crops in order to compete with us from an export standpoint here the last half of the marketing year, April 1st, May 1st going forward. That looks like it's likely to happen as well. But reality is we could see this carryout drop significantly. And at this point in time, I would argue that there's almost zero weather premium in place. So I think corn is setting itself up for, an explosive move higher. But I've also been feeling like that for the last 8 months or so. And it seems like every time we just need one more confirmation of a piece in the puzzle or something like that, the USDA, gives us a lump of coal. So that's also been a frustrating thing. We'll get folks bulled up and we'll start to see some investment movement and the speculative interest starts to grow and we get a negative USDA report or something like that. And so, it's like Lucy and Charlie Brown with the football. Eventually you just stop trying to kick it, I think. And that's where we're at right now.
So I see on Twitter a lot of the U.S. Twitter farmer guys will talk about the USDA numbers being flawed.
Mm-hmm.
What are they talking about when they say that, and what are the alternatives to the USDA numbers?
I mean, there is this big argument that there's no way that the USDA can wrap their mind around what's taking place or their arms around what's taking place, and they survey and yada yada yada. And I for one am of the belief that is it perfect? No, but it's hard to be perfect when you're talking about numbers in the billions. I mean, we're looking at 15 billion bushel of corn spread across 15 states. It's not really something that is easy. You're not going to go out and count every kernel to get 56 pounds per bushel to get all of the bushels factored in. You know what I mean? And so
Yeah.
there's obviously going to be some slush. I mean, that's just the way it is. I, for one, believe that there's no one out there that could do better than the USDA, I guess, at this point. They're not for profit, though. A lot of folks will argue that their job is to try to eliminate volatile periods and pricing. So maybe they do come out and say certain things or do certain things in order to really try to eliminate swings. But I, for one, I take a look at what the USDA has to say. There's certain reports that I maybe do not put as much validity in. I'm not a big fan of the weekly crop condition reports. We'll get those out, and a lot of folks will try to extrapolate what crop conditions mean for final yield numbers. I don't think that's something that I'm not going to waste my time doing it. I'll let other people tell me what the numbers look like. But I believe that the monthly reports give us a solid indication as to what's taking place, and then I'm a cash trader, so I'm on the ground level, and I just pay attention to what the cash market's doing, really when it comes down to it, to tell me what is actually out there or moving, in the countryside.
Right. So, Angie, I have this smart client of mine that insists that when I try to pitch him on getting long some ag names or doing any trades on this, he's convinced that the efficiency amongst farmers in terms of increasing yield is going to make this just a non-starter from the long side. What would you is he correct? Is this going to just be something that the prices of all these grains over the next kind of 5-10 years is just going to continue going lower as we get more and more efficient, or are we finally hit a point where the majority of the efficiencies are kind of already priced in there or already happened, and there's a potential for a real spike in prices? Like, could we see a beans in the teens kind of rally that excites everyone? And right now nobody talks about grains, but there was a time that grains were exciting and that a lot of people would trade them. Will that ever happen over the short run?
Yeah, I think so. Beans in the teens will really be a struggle at this point, just simply because we've introduced so much more bean production out of South America. Now, I'm not saying, I've always been taught never say never in commodities, never say never in always, actually, because nothing never can happen, and it doesn't always happen either, so I mean, in the next 5 years, could you potentially see beans in the teens again? Sure. I mean, there are a lot of extenuating circumstances that could develop. There's a lot of production. You go into every year not knowing what's going to happen, and you just kind of take your best guess using your historical view of what has taken place. Now, corn. Like I said before, we're really behind on fall field work. We've seen the cost really increase when it comes to fertilizer and chemicals, pesticides, things of that nature. So I am one of the believers that over the last several years, with the increase in corn yields, you've seen a lot of folks really try to work their way out of low prices via yield. So obviously a farmer works on revenue per acre, not necessarily price per bushel. And if he or she is able to maximize their yield potential, they're able to really kind of withstand some of these losses. You're looking at 150 bushel to the acre at 350 is 525, where at 200 bushel to the acre at 350, you're $700. So you really want to try to yield as much as possible. And I think a lot of folks have been spending the extra money to try to really kind of nail that high end yield that they're getting. Well, now, everything continues to get more expensive. The price of corn, if you look at the chart over the last year, hasn't changed at all, but the costs have increased 10 to 20%, depending on where you're located. So right. You've got to start cutting corners in places.
All right.
So is corn your favorite long? Is that what I take that to mean?
Yeah, corn is my favorite long right now. Corn and wheat both. Corn especially. I think wheat is to July. Soybeans right now, I think they're just there. Honestly, they remind me of the clown in It. Everybody floats here because I mean there's been a lot of folks that have been expecting soybeans to just absolutely collapse, and we have not seen that. Whereas wheat has absolutely collapsed. If you look at the chart
Well,
here,
so that's what I was going to ask you about there, Angie. So this is Patrick here. So,
yeah,
like, let's talk some technical levels and some trading as a.
Here come the squiggles,
Well, no,
Angie. Get ready. Here come the
well,
squiggles.
no. I just I'm looking at this drop that happened here, right? I mean, we saw a considerable drop in wheat prices in a very short order. I mean, this all happened in the 2019 year, and first of all, I wanted to ask you, like, what was the primary driver behind this drop? And is this in your mind like a bottom? Is this an opportunity where you can come in there and scoop up some of this wheat for a rebound back to 2018 ranges?
yeah, I believe so. I mean, one of the if you look at it, it was actually in the month of February too. And if you look at your daily, the colors here on your spiffy little chart, you had like one day where we saw some strength. And if you look at I wish I could show the mouse there, but the day in February, yeah, right there where you're hovering over. If you look at that, 483 had been the previous low. If you go back into that July time frame,
Right.
you had seen that 483 really kind of be the support. And so when we failed at 513 and worked our way towards $5, I had totally anticipated that 483 would be our stopper. So I really wasn't too concerned. I was like, 483 has been solid support for, several months now. I really don't expect us to absolutely fall out of bed. And then we did. And not only did we fall out of bed, we fell out of bed pretty hard. But if you look back at where we had been a year ago from today, so you can see
Yeah.
there that we had actually traded down to, we had broke the $4 range at one point. So we managed to
Yeah.
stay above that when we rebounded here this most recent time. And I think, when it really comes down to it, there's a reasonable amount of carryover that's left over here in the United States. But I really question what our new crop production is going to look like. I fully anticipate we will try to rework our way back up towards that 483 level. We closed today, right around that 465 or so. I think that, as long as we can maintain that support, we'll try to test that 483. If we can break it, we'll obviously work our way back up
So
towards five.
that's the short-term technicals. But do you think that it's
Yeah.
realistic for us to be north of 5 later this year on a sustained basis?
Yes, I think you'll be surprised. I think that what I've been telling most of my growers is I fully believe they'll have an opportunity to contract 525 to 550 cash wheat again before harvest gets here. I just right and maybe I'm speaking my position, maybe I'm speaking my backyard, and that's totally I'll embrace it if I am, but I'm looking at what's taking place from a production potential standpoint, specifically in soft red wheat. And you go into Ontario, their market's down, their acres are down, their production potential is down. The guys I have that planted wheat this past fall planted it late, planted it into very, very poor conditions. We had a very poor winter. We were warm and open for most of the first half, had some ice, and then stayed frozen for a while. And so the wheat crop sleeps, winter wheat sleeps through the winter time, but it has to sleep with, it sleeps better with a blanket, right? And so we didn't really get that decent snow on it. We ended up with ice, and then we got some snow. And so the one thing that I've seen since the melting has taken place is that a lot of the wheat really did not make it through winter very nicely. And so, obviously that could change relatively quickly here over the next couple weeks, but folks are starting to make decisions on whether or not they're going to fertilize this crop or tear it up. And most of the customers that I'm working with right now are telling me that they're probably going to end up tearing it up. They have some hedges on. We traded $6 wheat futures last year for 19. July 19 traded, during July of 18 last year, where you see that spike there on the continuous chart where we were 580 or so. These guys were able to lock in $6 plus futures for this year's crop. And they did, but that's still not enough to encourage them to go out and try to harvest a crop that's looking really poor. So I think our production will be down tremendously from last year. I think our carryout will be down from the year prior going into new crop. And so I think, there's some opportunities for explosive upside, but it's probably got to come from something happening maybe with the conditions in Russia or something like that. I think we struggle with getting our arms around what U.S. production potential looks like, but we do really well with trying to think of someone else having a crop failure. So we'll have to watch what takes place in the Black Sea region. But generally, that's what spurs a rally, and that's what kept us supported throughout much of this year is the idea that Russia was going to limit wheat exports, which they never did.
Well, how about just the price levels here on corn? Like now, corn held up much better. Obviously, it did not make it all the way down to the lows like wheat did. I mean, does that bode well for corn? I mean, are we heading back to that over the four level on the upside of corn in your mind?
I think so, yeah. Yeah, I think so. As we move ahead, I think we're back above four. I think December corn's probably the better buy just because you'll have some more time. Right now, D's corn's trading in that 396, 399, $4 range. And I think I wouldn't be surprised to get 30 cents or more of upside on that thing at some point in time, maybe even a little bit more than that, depending on what the weather looks like and if we do see that continuation of cold and wet here in the month of April.
And just finally, we'll just get an update here. Obviously, you're not as optimistic on soybean, but do you still see the potential that it could break to lower lows, or is that pretty much in your mind where the bottom is just not as much upside?
It really is going to depend on what we end up figuring out with planting. I think the upside's extremely limited either way. I don't know for sure if we need to see a complete collapse in futures, until maybe we get a better feel for what the Argentina crop looks like. We're about halfway through the production season there. Things look pretty good right now, but Argentina did take a quick turn for the worse a year ago, and really lost that production potential. The problem with soybeans right now is for every reason that I'm bullish, corn is really a bearish soybean story. So if you're looking at thinking that corn acres don't get planted because it stays cold and wet, you can plant a soybean. In 2015, we had folks planting soybeans into July. So there's a lot more time to get a soybean in the ground than there is corn. And so that's one of the things that'll probably continue to weigh heavy on that market structure here as we move ahead.
So, Angie, I'm going to ask you, even though you're sick of talking about China, I'm going to ask you anyway. Like, I've been kind of amazed that Trump is trying to get this, to sell a commodity, and he views this as a big win. Don't when we sell to China, doesn't like somebody that was going to buy from us just going to go and buy from Brazil or something? Like, doesn't it like getting China to buy any more of a commodity product? Doesn't that really not accomplish anything?
Yeah, I mean, for the most part, it really is one of those things where um, it's kind of like forcing someone to be your boyfriend. I mean, we've had the business with China, you love me, they squeeze them really close. But, we had the business with China because we were a low cost, high quality, reliable producer. And that's what we've been. If they needed beans, we provided them and we got them to them when they needed them. Brazil's got a reasonable production potential. Argentina exports soybean meal primarily. They tend to export the crushed product, not the whole product like Brazil and the US does. And so, yeah, I mean, we want to see China come in and agree to buy, but the reality is some of these numbers that have been floated around, the 1.2 trillion or the 3 trillion or some of these giant numbers that have come out, oh, China's going to buy all of their beans from us forever, those types of things, that's probably not likely. That's just a headline, which is why part of the reason that we're really dealing with this headline fatigue is that some of the headlines that are coming out really have no base in reality. They're just kind of there. And it makes you wonder, where they came from. But as a whole, I mean, obviously, we just kind of want to be back to where we were, in the industry. We just want to make sure that we can rely on them wanting to come in and import our soybeans at harvest time when we need to move them the most. And to be completely honest, I think we've probably ruined that. That's not a political statement. That's just a statement, at this point in time, they figured out that they could live without us this last fall. They figured out how to kind of ration back their demand and are now kind of purchasing soybeans. And it goes back to what I've said for quite some time. You don't rush out to Walmart and stockpile washcloths because Walmart's always going to have washcloths, right? It's the same with China and soybeans at this point. If they have a feeling or if they know that we're always going to be always have soybeans available to them, and if we don't, Brazil will, they're not going to come rushing to us and front load their purchases like they used to. So I think the market structure as we know it when it comes to the export side of things has probably changed significantly. I don't want to say forever because you never say never and never say always and never say forever in commodities, but it's going to be a long time before we see it change again, and it'll take some sort of major production issue in one of the two hemispheres to switch up what they're doing.
Angie, you went too fast with me on that line, but I'm going to go back and listen to it because sounds like it's one that should go into my vault. Okay, so for those who want to stick around and hear more about grains, make sure you go to the end of the show for